Welcome to Oregon Cash Flow Pro. My name is James Barber, and I'm here to help you maximize your cash flow. A viewer asked, why is an IUL risky for infinite banking? In today's video, I'm going to answer that question on why I believe an IUL is not an ideal vehicle for the infinite banking concept. Now, I do believe that it is a good product. I believe there are some good products out there that are Index Universal Life products, and they can work in most people's portfolio. They can even function for doing the infinite banking concept, but there are risks. So let's get into this.
Oregon Cash Flow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Now, the main reason why an IUL is risky for the infinite banking concept is because the lack of guarantees. The guarantees in an Index Universal Life don't stack up to the guarantees that we get in a whole life policy. With a whole life policy, we have our 4% floor, our 4% guarantee on growth. We have set insurance costs that do not increase over time. We have increasing death benefits that go along with those set premiums, and we become owners of the companies that we get whole life policies in, whereas with the IUL, we do not become owners of the company. So those guarantees that come along with whole life make that the ideal vehicle. The Index Universal Life policy lacks those guarantees. You do not have a guaranteed rate of return. Typically, the floor is 0%. Now, there's some products out there that offer a higher guaranteed floor, but some of those products also come with costs that negate that raised floor that they promise you. Now, I'm not going to say all of them do, but there's definitely some out there that do. They may guarantee you a 1.5% or a 1% floor instead of a 0% floor. But then they'll charge you 2% to participate in the index. And to me, that just doesn't add up. It could be good when we have another 10-year stretch of growth in the stock market, but that's not a guarantee. In fact, it's only happened one time where we've gone 10 years and not had any type of negative returns. So while I like the concept behind the Index Universal Life, it's that lack of growth guarantee that limits its use for infinite banking. So the insurance costs on your Index Universal Life policy are based on annual renewable term insurance. That increases every single year you own the policy. When you're young, those costs are cheap. Annual renewable term is very inexpensive when you're young, but as you get older, those costs go up. So if we are looking at insurance with the type of coverage that we get in a whole life policy, we're talking hundreds of thousands to millions of dollars worth of insurance. When you step over to an Index Universal Life policy and have a similar type of coverage, those costs are going to be immense when you get above, say, 70, 75, 80 years old. Those costs really, really go up, and it may not be worth it to continue that policy. So while I like an IUL for being able to put in smaller dollar amounts that might take the place of, say, a Roth IRA, I don't like it for putting in tens of thousands or hundreds of thousands of dollars a year into that type of policy, because now you're talking a lot higher death benefit that you're going to be paying for, and to do that with annual renewable term insurance could be cost prohibitive when you get older. Another drawback to the Index Universal Life when it comes to the lack of guarantees is the way that the insurance companies reduce their risk with the Index Universal Life policies. One of the ways they do that is the ability to change the caps. They can lower the caps or raise the caps. And if they lower the caps too much to reduce their risk in a really volatile stock market, that can severely damage the possible rate of returns that you can get. And it may even get to a point where you can never recover from that. Now, it's not very likely that that's going to happen because all of these companies compete against each other. But when it comes to survival, if an insurance company gets itself in trouble and it needs to reduce those rates, you don't have the contractual guarantees that come with the type of growth for whole life. And you may end up in a situation where, yeah, you started off with the possibility in an IUL of being able to make much greater returns, but because of the ability of the insurance company to change those caps, it can really reduce the performance of those policies. While it may not be likely, it is a possibility, and that does present some risk in comparison to whole life. Now, if we're comparing an IUL to a Roth IRA or an IRA or a 401k or just investing in the stock market, clearly the IUL is much less risky. But for the infinite banking concept, when we're talking about the type of high dollar premiums that we're dealing with, for me, I want to see more guarantees. So something to watch out for is there's some other folks out there that are putting out videos and they're selling the IUL products and they're making it sound like it's the greatest product ever invented. And one of the things that they point to is these really high rates of returns. And they're relying on cap rates at where they're at right now and where they've been at historically. And what it seems to me like is they totally ignore the possibility that those cap rates could reduce quite a bit in the future. One of the selling points that they try and make is going through the Great Recession and the Great Depression, these IULs have held up and performed well, and they'll outperform any whole life policy. Well, the problem with that is we haven't seen what these insurance companies do to cap rates during a Great Depression. We're kind of seeing now what they want to do during the pandemic that we're involved in, and they're wanting to reduce cap rates. So the cap rates have been going down year after year after year. They've mostly been holding steady for the last year or two, depending on the company that you're looking at. But even still, they've kind of pushed down. I haven't seen any of them really start to go back up. I've seen one company move up slightly for some of their clients, not for every policy that's out there. So for the most part, we've seen them come down from when they first were developed and they first sold. We haven't seen them go back up yet. Now, I expect we would probably see that in a different interest rate environment, possibly a different stock market environment. Maybe when things even out, we'll start to see them raise again. But it's also possible that we might just see other products take their place. We don't know what the future will hold, so we really like to have those guarantees if we're going to commit hundreds of thousands of dollars to these policies. So be careful of the people out there who are presenting to you all of the good things about the IULs and none of the possible bad things. I got into a conversation with one of these guys that was pitching that, and he just would not even acknowledge the risk that the cap rates could be different from these carriers in turbulent, volatile stock market times. And I don't know if he's just doing that because that's what he needs to do in order to sell the product. You know, if you want to be a good salesperson, you've got to believe in your product and you got to believe in it 100%. Now, I believe in these products. I believe in whole life products that are designed how we design them for infinite banking. I believe in the index universal life products, how I design them, and with the caveats that I present them with, because there are risks. As long as you know the risks, it may still meet your needs, but I'm not going to sell you on all of the benefits and just completely ignore the possibility that the risks that they present are not out there. That's just not what we do. So it will be up to you to determine which products will fit your needs. What I view my job is making sure that you're educated enough on what all of that is. I think that pretty much covers the risks in the IUL. If I missed anything, if you have any questions, put them in the comment section below. We'll take a look at it. I'm happy to answer your questions. And if you found value in today's video, be sure to hit the like button. Subscribe to the channel if you want to continue following along on this financial journey. And for more on Index Universal Lives and Whole Lives, check out these videos right over here. See you next time.